more, and I could be able to point you to some information that you can be able to learn more about Forex. So we're going to begin. Are you guys ready? All right. So let's get started. So first of all, what I personally do is I personally use TradingView when I'm on the charts. And the reason why I use TradingView is because for me personally, it is very fluid. It's very clean, I have to say, okay? And on here, you'll be able to chart very, very well. So we're going to, first of all, go on to EURUSD. And what I'm going to do is I'm going to really focus on this specific pair right now. Oh, actually, let me go back. USD, JPY. All right. So I'm going to load. So I already have a chart breakdown, right, for EURUSD. But if anything, what I'm going to do is I'm literally going to erase it completely, and I'm going to start over from scratch, right? What I would definitely suggest is have a paper and pen. I need to get a pen myself. And you want to take some notes. You want to take some notes. So what I'm going to do is I'm literally going to just erase everything, okay? So I'm going to go to remove and remove all indicators and drawings. I don't know how many people are on. We got 63 on this stuff. All right. All right. So I'm going to go and make sure that the entire screen is completely blank, okay? And what I want to do is make sure that I just have nothing on there, all right? Now, I want to make sure that I'm going to start out on the monthly time frame. And now, why am I going to start with the monthly time frame? I want to see literally everything that has happened in the markets, literally everything. And the reason why I want to see that is because I want to make sure that I can be able to know what's happened in the past. Right? So what we're going to do is we're literally going to start out by doing these things called monthly key levels. Right? Monthly key levels. Now, what is a monthly key level? Well, a monthly key level is the largest type of support and resistance is going to be on the monthly and weekly time frames. All right. Now, this helps us get a broad look at the market, but still being able to apply you can be able to still apply technicals like Fibonacci. And if anything, we'll probably get into that a little bit. And on the larger time frame, you're able to actually build up a better case of what's going to happen on the lower time frames. Right? So what we're going to start off doing is we're going to start off by creating a foundation where you find support and resistance on the monthly time frame. And what you're going to do is you're going to look for situations that will either look like a touch, right? So let's just say they'll either look like where the market is doing something like this right here. This is what we call a touch, right? Where there's like a support and a resistance on there. All right, support and a resistance. That's what we call a touch. So that's like the first situation. Second situation will be where it will be like a gap where it doesn't really hit both of them. There'll be like a gap in between, right, as far as support and resistance. And then the third one will be like a overlap. All right, where it overlaps both of them. All right, so that's how we're going to start. Now, when it comes to drawing these monthly and weekly key levels, is this done on the line chart? No, nothing is ever done on the line chart. All right. You can do it on the line chart, but when you do it on this, it just works out well. All right. So let me show you what it looks like on the line chart. Yeah, you can do it on the line chart actually. When it comes to the monthly and weekly key levels. All right. So you'll see that there is overlap right here and then an overlap right here, right? So yeah, you will go into the line chart and then from there, you know, uh, do the monthly and weekly key levels on here, okay? But that's the only time that you're going to use the line chart. All right. So you're either going to see a touch, a gap, or a what do you call it? An overlap. All right. And what you're going to do is you're going to want to find some type of foundation in between here where you see the touch gap over and over and over at a specific point in the market. All right. So what I'm going to do is I'm literally going to start out at the top and I'm just going to work my way down. Right. Let me just erase all of this. All right. Actually, let me keep that. All right. So what I have on here is a button where it automatically draws a line all the way across, right? And you can be able to go to monthly key levels, right? And then it'll automatically show up the way that I like it. All right. So I'm just gonna start out at the top and find out where there's like a major support and resistance, right? So this is probably one right here, right? This one right here. So as you can see here, there's somewhat of an overlap right here. If I was to kind of zoom in, right? Actually, this one is a little bit more major. Price touches here, touches here, here. Next one. So this one definitely. Let me see the difference in pips. Because you want to make it where it's a big enough gap in between both of them. But it can be too large. I can do this one. Because you can't make it too large. It can't be more. Okay, yeah, this is not bad. All right. So you don't want to make this foundation too large. The reason why is because it just won't be considered as like a good enough foundation. You don't want to make it more than 1,000 pips usually, but you don't want to make it more than 1,500, right? So it matters on the specific pair. So let me see something here. Right, see, this is too small being at 500. Right, you would want to make it a little larger than that. All right, let's see how I had it from before. That's okay. All right. So we can have it here, and we can have it like here. We could also have it here. I really like this one on here. Let's see what that gap is. 1500 is just too large. Okay, so this is, I'm just gonna choose this one here. All right, this should be fine. All right, so yeah, this should be good right here. This is 1,000 pips right here. This is good enough. All right. So the reason why I chose these right here is because I see a major level support right here, major level support right here. If anything, I'll put this a little higher. And then we see a resistance right here, right? So we see support right here, support right here. We see resistance right here, all right? And I need to be able to see the chat at the same time on my phone. Keeps going. All right. All right. So again, what we see here, I see a level of support right there, which is not that major, right? A level of support right here. This is what I was looking for right here, right? A major level support right here, a major level support right here, and then a level of resistance right there. So if anything, I'm gonna put it like in the middle of these two. Okay, this one I really like over here. Now, when it comes to this one right here, it wasn't really that major that I could be able to find something. So if anything, I'm gonna put it in the middle of all this, where I see a level of support. I see it's like in the middle of this right here, the middle of this one right here, as far as like overlap, right? And then also over here, I see a level of resistance, and then pushes down. So that's why I chose these two as far as my foundation, right? So this is the monthly and the monthly. So you see this number right here, right? I'm gonna take this number and I'm gonna subtract it by this number, and it's gonna tell me the distance between those pips right there. So 1.23321 and 1.12154. Okay, and I'm just going to literally just subtract those numbers. So I gotta pull out my calculator. So are you guys with me? I want to make sure that you guys are still there. All right, so 1.23321 minus 1.12154. So the difference between those two numbers is 0.11167. So that right there is my monthly just call it monthly for now. 1.1. So this is 0.11167. Okay, weekly, and I'll get to that later on. Yeah, you just want it to be around 1,000 pips. So this right here, as you can see, is 1,100 pips, which is cool. Okay. Wow, that's crazy. All right. So this right here is 1,100 pips. Okay. You just don't want to make it too large, and you don't want to make it too small. So now what I'm going to do is I'm literally going to take that gap, or this number right here, and add it to this number right here. Okay. So 1.23321 plus 0.11167. Right? And I'm going to take this number right here, and that's the number that I'm going to put for my next area. 488. Okay. So as you can see here, it literally goes to this level right here, right? Which is pretty interesting. It'd be cool if it was just a little higher to like here, right? But what you're going to see is most likely the weekly is going to show up like right about there. And when I put on the actual candles, you'll see like the sticks literally hitting it. Okay. All right. So that's this number right here. Now what I'm going to do is I'm going to take this number right here and add that right there. So 167. 1.655. And understand, you're not going to have to do this over and over and over. You're literally going to do this, one time per year type thing. Plus 1.56822. 6.822. Cool. And you'll see how it literally goes to the top of this. Right. Now I'm gonna. So this was right here. Foundation. This right here, we'll call this zone 1. This is zone 2. And this is zone 3. Right? So now what I'm going to do is I'm going to take this number right here. Most likely a weekly is going to pop up right there. So I'm going to go to that foundation number, right, that we came up with in the beginning, right? And I'm going to subtract that monthly. 1.12154 minus 0.117. All right, so it pops up there, and then I'm going to take that. I'm just going to subtract it as well. 0.8982. 8982. Alright, I'll probably do it one more time. Seven, 8, 6, 5, 3. 7, 8, 6, 5, 3. All right, and then it went all the way down there. Right, so now I'm going to take this zone. So this is zone 1. This is zone 2. And then this is zone 3. Okay. Now, you don't really have to draw this in. This is just so I can show you. All right, so this is what it would be for the monthly. Now for the weekly, I'm going to take that number, 0.11167 divided by 2. So this is going to be the weekly. 5, 5, 8, 3, 5. Okay. So I'm going to take this, and I have a weekly template. So you see the weekly goes over here and the monthly goes over here. Okay. So now what I'm going to do is I'm going to take that first foundation that we came up with from the beginning, right? And I'm just going to add that weekly number that we came up with. Okay. So when it comes to the numbers that I'm subtracting, it's the first foundation's range that we came up with from the beginning. And the way that I came up with the weeklies, I just divided the monthly range by 2. Plus 0.055835. So 1.77375. All right, so that's right in the middle. As you can see here, it hit that point, hit that point, hit that point. See how literally to the T it hits that weekly, which is pretty interesting, right? And right now, where market is right now, it's near that area, right? And as you can see, it hit that point and then reversed, cross that point and reverse, hit that point and reversed, hit that point and reversed. See what it does? All right. So now that we have this weekly, right? Essentially, to go from this point to this next weekly over here, it's literally just the monthly's range. So I'm going to take that number that we came up with, the last number that we just came up with as far as the weekly, and we're going to add the monthly to it. 0.11167. So 1.28945. 28945. Boom. And let's see if that reacted well. Sort of. It's literally like in the middle of all this, but it hit that point and reversed. Kind of hit that point and reversed. Hit that point and reversed, as you can see here. All right. Now I'm going to take this number right here, And again, we're going to add in the monthly to this number, plus 0.1117, 1.400715. Okay. So as you can see here, for this, hits this point right here, and if I was to put on the candlesticks, kind of, right, hits that point right there, hits that point right there, hits that point right there. Pretty interesting, right? Right here, and right here, that weekly. Seems like it's pretty strong. Okay. Now, and then the last zone, we're going to take that number and then add the monthly to it. 1.512385. And again, remember, this is something that you do one time per year. You don't have to do this over and over and over. Once you have this set, it's done. As you can see for this weekly right here, hit that point and then reversed, right? Hit this monthly right there and reversed. Kind of hit that point, hit that point, hit that point. And as you can see, it literally tells you what's going to happen in the market, right? So this weekly in the foundation that we have, right, in this foundation, what we're going to do is we're going to take that number, right, which is this number right here, the 1.177738, and we're now going to just subtract to get this weekly over here. So again, 1.177375. That was the one that was in the foundation, and we'll just subtract our monthly range. So 1.065705. And mind you, like, this is to get to the T. Usually people don't do this where it's literally exact. This is why I add and subtract and stuff like that. Some people, they just kind of guesstimate. I don't guesstimate. I get exact. Okay, so as we can see, it bounced off this, and continued to that weekly level, and then, you know, went down here most likely to that weekly level, and then went up to here to this weekly level, and then shot down to this weekly level, and then went up to this weekly level, and then went down to this weekly level, and then went up to this monthly, to this weekly, to this monthly. As you can see, you could just trade from monthly to weekly key levels, and that's how you can be able to do long-term trades and just let them rock, because what's going to happen is the market's just going to go from monthly to weekly, from monthly to monthly key levels. And this is like the secret sauce for some master traders. So minus 0.11167. It's just, you got to make sure, and this is key, you got to make sure that when you are drawing out your monthly and your monthly key foundation, you got to make sure that it's right from the beginning. Because if it's kind of off, your numbers may be a little off as well, right? So that's why I was taking my time on figuring out, okay, where am I going to put my foundation? Because that right there is probably the most important part about this whole setup. Because if the foundation is wrong, then obviously, you know, everything would be wrong with it. You guys following? I know this is probably a little more than our usual trainings, but that's why, you know, I kind of had to hold back from session number 3, and because believe me, this is major stuff. 8, 4, 2, 3, 6, 5. And I know you can't see the calculator on your screen, but I am using a calculator to come up with these values. 2, 365. So, and as you can see, boom, like it literally hits them all beautifully. Okay. Now another thing that that we tend to do as well is we will kind of set up like a buffer zone to let people know, hey, to let you know that, hey, listen, there's a monthly coming. Okay. Now this can take some time, but just know that it could be able to help out. Right. It could definitely be able to help out. All right. So what I'm going to do is I'm going to take this number right here. Right. I'm going to take this monthly right here, and I'm going to add 50 pips to the top and subtract 50 pips to the bottom of that. And I'm going to literally create like a barrier or a buffer saying, okay, hey, listen, there is a monthly key level coming. Okay. And so what I'm going to do is I'm going to take that number right here and I'm going to add 50 to it, and I'm going to subtract 50 to it to be able to create a buffer, right? That's going to look just like this. So when the market gets close to it, then I can know, hey, listen, a monthly is coming, and most likely price is going to reverse or something like that. So if anything, I'm going to put it on this one right here, right? So the 1.1.23321 plus 0.005, 1.23821, and then I'm going to subtract 100 from that. 1.22821. Right? And what this is going to do is literally create a buffer saying, okay, if the market comes close to this, then there's literally a monthly key level that's coming. Okay, so if I also go to a lower time frame, let's just say like the daily, right? You'll see that, hey, listen, a monthly key level is about to come, right? And if it gets around this region, as you can see, it reacts. So what I'll do is I'll probably stay away, or just know that, hey, listen, something's about to come. And what I'll do is I'll literally do it for every single monthly key level. All right, so I'm just going to do it for this one and for this one, just for time's sake, so that we could be able to proceed. And what I'll do is I'll also stretch this out into the future, all the way, so that literally it could be 2059 and this will still be there. Does that make sense? That's why I said, listen, you don't have to do this often. You do this one time and you're set for life, or at least for a long time. All right, so I'm going to take this number right here, 1.12154, and I'm going to add 50 pips to that. 1.12654, and I'm just going to subtract 100 pips from that, and that's going to give me 50 pips under 1.12654. So I'm going to take away from this 1. 1.2654. I'm going to stretch this one out into the future. All right. So that's what we have here. Right now that we have the monthly and weekly key levels, I'm going to start, if anything, start marking up the chart a little bit and seeing, okay, what do we have? What do we have right now? Right? What do we have right now? So what I have here is I have a trend line, right, for my monthly, right? And what I see off the bat right now, if I was to go and draw a trend line, I see literally there's a perfect trend line opportunity right here. I see a perfect trend line opportunity right there. And if anything, I'll stretch this out all the way into the future, right? And then what I also see here is, if anything, another trend line opportunity I'm just going to do it for this portion right here. So I see another trend line opportunity right here. I don't know why I did that from the beginning. All right. Sheesh. Okay, so I have another one right there, right? And if anything, these will merge at one point in time, right? So obviously we see some type of downtrend, right? And at one point in time, this was, some level of support turned into resistance over here. So this is support, broke through it, got to this point right here, and then started shooting down. And if I was to pull out my fibs, I could be able to see, okay, when did it reverse? And it, if anything, reversed around 50% and 61.8%, right? And I see this thing, dropping hard, right? So now that I have this over here, I can now go down onto a lower time frame, like the weekly time frame, right? And I'll be able to see that, if anything, the market right now is right at some level of support. Market shot up, shot down, and it got to a weekly key level, shot down, and then from there found some level of support, and then shot up to that trend line that we drew on the monthly time frame. And then as you can see, it literally hovered on that for a while and then shot down, and now it's at that same level of support. So there's either two things that can happen. The first thing is it could probably head up to this trend line right here and then drop to that trend line right there, right? And I'll show you the fact that this right here, remember we're on a weekly. To get to that trend line, the monthly trend line is 543 pips, which if you had $1,000 in your account, and you're doing standard lot, that would be about $5,430, which is cool, right? And now let's just say that this shot down all the way after it hits that's 2,000 pips, 2,100 pips. That's possible. So do you see why it's so major to look at higher time frames like the monthly, so that you can be able to see, okay, what can I expect, long term, right? Because then what I could be able to do is just create a bias in my mind saying, okay, what I'm looking for is this long term, and then after it's done that, then this is what I'm looking for long term. So this is my first analysis as far as it hit that level of support. It may not break that level of support, start heading up to that trend line again, and then from there shoot down. Or let's just say that it does break that level of support right here. I believe what it's going to do is go straight to, what do you think? This monthly key level. All right. Once it goes to that monthly key level, what I believe is going to happen, I believe it'll shoot back up to where it broke support, either here or it'll go up to that that weekly key level, and then from there shoot down to this trend line that we drew on the monthly time frame. All right, so that's what I believe are the possibilities when it comes to EU, right? And these are for long term, trades and stuff like that. Okay, so that's what's going on. Now, what I'll do is I'll probably go down to the day time frame and be able to now analyze, okay, what can I do, today, or what can I be able to focus on and look for in the next week or 2 weeks or so, right? So what I see here, now that I'm on the day time frame, is I see another trend line opportunity that I could be able to draw. And this trend line, I could be able to draw like here, right? So wick to wick, and what I'm doing is I'm drawing it from this wick, the bearish wick, to this wick, to this wick, to this wick, right? So I see a descending triangle forming, and I see that it hits this point right here, shoots up, hits it again, shoots up, and then what do you think it's looking to do? I see it looking to, if anything, start dropping. So now I'm going to go onto the 4-hour time frame, right? And I'll see, okay, what's going on here? Well, I see that there's definitely some level of support that's on here, and this is why I have this right here, this alarm, and I said this a while ago. It says, and mind you, if you do not have TradingView or like the purchase version, then you won't be able to access this, but it says EURUSD crossing that level, sell, 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 and I'll say why, right? Because it literally sends me an email and a text saying what's happening. So continuation of the downtrend on the daily and the H4, breaks through supply and demand zone, breaks through level of support on H4 and passes through. All right. So so this is like, a major thing for me personally, as far as a trade that I'm looking to be able to get into. So right now, what I see the market is attempting to do is it is attempting to, if anything, probably hold this level of support. Let's see if it broke it on the hour time frame. Yeah, if anything, it broke it on the hour time frame. Right, so it broke this level of support on the hour time frame. Right, it broke it. Now it's shooting up. It created a level of resistance on that hour time frame. And let me pull out my fibs. Point A, point B. Right now, and there's a reason why this is green. Right now, it's at a level of 38.2. So what I'm going to look for is, now I'm going to go down to my lower time frame for my actual entry. Right, and I'm probably going down to the 15-minute. All right, and I want price, if anything, to pass this level right here, this last lower high on that 15-minute time frame, and I want price to pass this point right there. And if price passes that point right there, where it passes this lower high, then I'm going to look for my first selling opportunity. And where am I going to go? Because the thing is, it's cool to get into the entry, and a lot of people, they focus on the entry. But I think what's most important is your exit. Where are you going to exit? Okay. Where are you going to exit? So where do you think I'm going to exit first? Well, on the, what was it, like the weekly time frame or something like that, there was some level of support right here, right? There was some level of support right here. Now, for the market to break through that level of support, it has to do something major, because it's had that level of support since 2017, right? So, mind you, I'm on the 15-minute. All right. To break through that, it needs to be something major. So I'm going to be safe, right? And I'll probably enter in my sell and create my take profit at that level of support. Okay. Now, the thing is, the reason why I'm not going to get into a market execution is because the thing is, I don't know if the market is ready to go down as of yet. How do I know that the market may not go all the way up to 61.8 and then reverse and shoot down, or probably even go to that level of that trend line right there, right? And there's some confluence right here at 78.6, and then shoot down to that level, to that trend line right there. So there's many different ways that this could be able to go. But as you can see here, the market has hit this one, right? And there's this number that we look at when it comes to the number 5. So it hits it 1, 2, 3, 4, and then if anything, this may be the 5th one right here where it'll break through, but we don't know. So this was my breakdown when it comes to EURUSD. We have some long-term situations that we can look at, and we have a short-term situation that we can be able to look at. Now, what I would definitely suggest, if you've never been, and I just wouldn't look for any buys in this situation, because on the higher time frame, what do we see? We see lower highs and lower lows, lower highs and lower lows. I wouldn't buy in a downtrend on a higher time frame in any situation. Okay, that's called counter trading. So now that we have gone through EURUSD, we've gone through it in detail. There's some extra things that we could be able to go over, but if you are looking to learn more when it comes to Forex, and somebody invited you on here, what I would definitely suggest that you do is to get back to the person that invited you on here, and let them know, hey, listen, I want to learn more. I want to really get in depth when it comes to Forex. If anything, they could be able to point you to some videos. What you can be able to do is you can be able to go onto FxProNowcom, and there's a section on there that you could be able to actually go to where it has a future members portion, and on the future members portion, there is some extra videos on there. Right? You just want to enroll on that portion if you haven't enrolled already, where it says future members live stream, right? And what you want to do is you want to, if anything, look where it says, what is Forex? There's a video on there, 3 minutes long. And then from there, there's also a detailed explanation in history. You can get into that if you want to. But what I would definitely suggest that you do is go onto the video where there's a short introduction to the actual IML Academy. And what I would definitely suggest is really get to know what Forex is, and you can be able to do that through the IML Academy. So if anything, watch these videos, the short video, and if you're really intrigued, watch the detailed video. And then from there, if I've personally invited you on here, you can be able to go into where it says get started here, and then if anything, fill out the information or just contact me directly through my cell phone or through Instagram, and we could be able to get all your questions answered. So again, I greatly appreciate your time. Hopefully this helped you out in any form, in any fashion. What I would definitely encourage is to go on to the website, go on to the go on to the website FxProNowcom, and you can be able to actually get information on there as well. So again, I greatly appreciate your time. If you have any questions, get back to the person that invited you on here, and let's become an FX Pro now. So if anything in the comments section, write a couple things